Bring in Barton Crockett, who's a senior analyst at Rosenblatt Securities, along with Julia Boorstin. I always love it when we get to sit at the same table together. Julia, let me ask you, when they're talking about being broad, are they trying to be all things to all people at all times?
I think it's really about general entertainment that's founded with its sort of origin on this family brand of Disney. And if you look at the strength of this new bundle, they said of new subscribers to their ESPN app, they said 80% of those new subscribers to ESPN All Access are also paying for Disney Plus and Hulu. And they're really working to make Hulu the general entertainment brand. You have Disney for families and kids and those iconic brands. And then you have sports. And so they're really focusing on streaming and said they're very optimistic about the growth of that bundle driving those results. And that's why they reiterated their guidance for EPS growth for the next 2 years.
And when he says maybe even gaming, does he mean video gaming, or in my world, gaming means gambling, and it's not that far-fetched because of ESPN's tie-up with Penn, which is now ending early.
Exactly. So you have ESPN and the tie-in with gaming. You're part of gaming. And then you also have the fact that Disney did a deal with Epic, and they've been working to bring Disney's brands into Fortnite and make sure they're really integrated into the video game world as well. So I think it could be both.
Okay, so Barton, talk to me a little bit about what investors need to hear from Disney at this point. What aren't they hearing that's causing this sell-off?
Well, look, I'm a little bit surprised at the sell-off. To my mind, this felt like maybe, a couple of percent down, not kind of high single-digit percent down. But look, I thought that it was encouraging that they're able to retain their outlook for this year next, despite everything going on, all of the YouTube TV kind of outage talk, the macro concerns. And, I think that we can, spend a lot of time talking about the streaming, but the reality is that this company's P&L sinks or swims on theme parks. And the theme parks were a little bit mixed, but overall just some great strengths. I think, the disappointment was, at a slight level that the domestic business decelerated a little bit, but the international accelerated, and their bookings and their ability to fill up these new cruise ships that they're launching is just amazing. So that's the Disney magic right there, is the theme parks. And, in terms of the Disney Plus, I was just incredibly surprised at how much they were able to grow the subscriber base. They're adding 3.8 million more subscribers in the quarter, really on the back of content strengths and some of their expansion internationally. So those are good things. Those are things that I think when people settle back and take a look at what's going on, they'll feel more comfortable about. So I'm a little bit surprised at the reaction here.
And Barton, there's obviously been a lot of interest in this blackout. Disney channels blacked out on YouTube TV. Hugh Johnston told us they're going to, wait as long as it takes to get the deal that's right for them. How much do you think this is going to end up costing Disney? And do you think there will end up being a benefit in terms of an addition of D2C subscribers?
Well, look, the cost is kind of dependent upon how long, and there's been, say $10 a sub for a month, times 10 million subs. So you can do your math on how long you think it is. But the thing that I thought was encouraging was how confident they sound about this fight, right? So I think that the bear story that's meaningful for Disney is that somehow an internet juggernaut like Alphabet, Google can just roll over them, that they don't need YouTube TV, and they can just in the process squash Disney. And the reality is that Disney feels confident. They're talking about YouTube TV needing them, and they're reiterating their guidance despite this going on. So to me, that feels like there's going to be a deal in the offing in the not too distant future. And I think there'll be some relief once we get that.
Do you think that all the focus on the media side of this is sort of overshadowing the opportunity in experiential? I mean, because when we talk about the parks, I'm covering cruises now, and I'm looking at what Royal Caribbean, what Norwegian, what Carnival says about bookings next year, and thinking, Disney not only has the parks, but it has the cruises. It has some experiential stuff that
it's a real differentiator. Yeah. And they do have these 2 new cruise ships coming online in the first half of next year. And it sounds like bookings are very strong. And just because there's more capacity, that's not going to be a problem. He did use the word choiceful. He said that consumers are being more choiceful about how they're spending their money, but that they're not skimping on Disney vacations. So it sounds like they're growing to meet the demand, but these experiences are not cheap.